Okay, this is James Possible, aka DS Domination Dad, and I'm going to revisit the binary options compound calculator. And there's a couple reasons for that. The primary reason is thanks to Jody Weisner, I was able to uh, find an issue with one of the calculations. And to be candid, I was less than enthusiastic about the initial outcome because I thought I could, at 50% win-loss ratio, I expected to see the account dwindle down to nothing, and it wasn't. So it didn't. I wasn't sure what was wrong, and uh, so I left it like that. Thanks to Jody digging in and looking at the calculations further, he did find where in fact the logical error was. So I have since corrected that issue, and since I was in there correcting that, I went ahead and made a few other aesthetic changes, make it parts of it a little more readable and understandable. And so let's dig into this thing. And there's a few things I want to touch on before we dig into the actual spreadsheet. And really, the initial reason, the thing that really motivated me to create this spreadsheet to begin with, was the static nature of the initial compound calculator that was presented. And by static, I mean it had pieces of it that didn't change. They were not random. They were arbitrary and unchanging. So one of those things would be it calculated, I think, out 3 months of trades, and it, at a 70% ratio, and all of that was manually calculated into the spreadsheet. So you really couldn't change it without some effort. And the positioning of the wins and the losses would not change, no matter how much you changed other characteristics. The cycle of wins and losses didn't change, and the particular bias that I saw in the spreadsheet was to overstate the outcome over the given period of time. And so I wanted to produce a calculator, a compound calculator, that would give you a real feel for the potential outcome and the potential risk as well, so you could understand where you needed to be as a trader when trading. And so I've thanks to Jody, I've fixed the one calculation, and looking through the others, it just seems like that was the only calculation that was really off. I addressed some presentation language, like right here you see payout percentage. I changed that. It was broker percentage, now it's payout percentage, and that's based on the asset. Every asset has a certain payout percentage. Seems like most people just use 70 as a default. Now on the spreadsheet itself, you have trade amount. So this is the trade, the numeric trade, the number of the trade that you're actually taking. So this is first trade, second trade, third trade, fourth, fifth, sixth, and so on. And I did expand this. It actually goes out to 14,100 trades. So it really will project you out to the future um, based on what you input into the spreadsheet, which brings me to the inputs. And there's only 7. 2, 3, 4, 5, 6, 7. The starting investment, the payout percentage, the winning percentage, the minimum trade, the maximum trade, per trade percentage, and trades per day. So that's all you need to change. And I think part of that is confusing because we're used to being able to change so many variables and things. But this is really a calculator, a projection into the future, and it is designed to teach you or to illustrate for you the potential outcome and of both risk and profit. So I want to explain a little bit more about it. Now, it is pretty complex in how it calculates and very dynamic. In other words, it changes based on whatever you're telling it to do. And by saying that, one of the biggest things is trades per day. Not everybody's going to trade the same. So a person who trades one trade a day, a person is going to require a different spreadsheet than somebody who trades 5 trades a day, or even somebody who trades 10 trades a day. So if I do one trade, now there's no money or anything in here, but you can see that it begins to calculate the days. So you see one trade per day. So you see day 1, 2, 3, 4, 5. That equals week 1. Then we get down to week 1, 2, 3, 4, and there's your first month. And that's what one trade a day looks like. Well, let's take that to 2 trades per day. Now you can see we have 2 trades happening per day. And so it starts expanding it out a little bit more. Now, here's what it would look like if somebody's trading 10 trades per day. See, there's 10 trades. That's day 1. 10 trades, day 2. So by the time you get to your first week, you've executed 50 trades. Okay? By the time you get down to there's week 2, week 3, week 4, which is your first month, you've executed 200 trades. So this allows you, if we just keep going down, in fact, I'm just going to go to the end here. You can see, right, where's it? So at 10 trades per day, this actually will calculate for you out to 70 months, roughly 6 years. So it's a very strong illustration of potential outcome, and it's based in random calculations. And why is that so important? Well, I think there's a tendency when we look at numbers to get a little blue sky. I call it the blue sky bias, right? We tend to make the numbers look better than they most likely will in a practical sense in real life. And this happens for a couple reasons. You have some people who just that's how they sell something, right? They want to make it look good. But then you have the other aspect that we don't really understand the I don't think there's an intimate understanding with statistical calculations and probabilities and stuff like that, so we tend to oversimplify the math, and by oversimplifying the math we end up with an outcome that can truly be overproject. And so I want to cover that in this video. I want to talk about that a little and go through that within the spreadsheet itself. And before I do that, let's talk about indicators. Just because you have an indicator that claims to have a 70% or higher success rate, and there's more than one out there that do claim that kind of success, it's important to understand that it does not mean you will have the same result. Everybody's going to trade a given indicator differently. And I think you can see that within our forum, that there's some truth to that. So, and this happens for many reasons. One is we're not always as objective as we think we are when we're using the indicator. And there may be things, a bias, a particular trader might have a bias trading a given indicator, and as a result of that, produce a different level of wins than somebody else. And until you actually watch that person use it, it might be difficult to understand the differences in the trading. And so the goal for you is to figure out how you trade a given indicator. If you trade it at 50%, then I'm going to illustrate for you that that's not enough. You're going to have to do better than that before you start trading your own money, because you're going to lose your money if you do that. Okay? And if you've gone through and done 200 demos trades, and your percentage is still pretty low, then you need to talk with the group and figure out what's going on. Okay? So let's go ahead and plug in some numbers. Starting investment $500. You can make it bigger or smaller. That's up to you. I'm going to start with 500. I think that's a good middle ground. Payout percentage. Again, this is the percentage being paid on the asset. I'm going to average that at 70%. Winning percentage. Going to start with 50% because I want to make this very clear. Minimum trade. Now, what is the minimum trade all about? Well, if you say to yourself, I don't want to trade any less than $20, so I plug in $20. You can see that the numbers are starting to calculate here, right? Okay, and you can see we're hitting the minimum 20. And it stays at the minimum 20. And even though, let's go down here to, I don't know, right here. Let's day 1, 2, 3, 4, 5. At day 5, our balance is at $350. Let's take a look at $350 times 0.05. That's 5%. At 5%, really, we should only be trading $17.50. We're trading 20, so we're trading a little higher than that. So that's not a significant difference right there. But now you see the account is dropping, and now we're down to $214. At $214, 5% is $10. So if you don't want to trade any less than $20, or you can't trade any less than $20, that's where you need to place the minimum. But understand that once you drop down to a certain point, you're going to be placing a higher risk on your money that is in your trading account. You're going to go from a 5% risk to a 10%, 15%, 20%, whatever it is. Because look down here, we're down to $100, and we're still trading $20. So that's a 20% risk at that point. At that point, if you're not hitting wins, it can get real ugly real fast. In fact, let's look at this with a $500 balance. And okay, so, and actually what am I doing here? I'm just calculating out. So really, all we're doing here, because I have the percent per trade percentage is set at 0. So really what's driving it is the minimum trade. So really there's a lot of flexibility in these calculations. You just have to understand the intricacies of it. So by setting the per trade percentage, which is the percent on your investment that you want to trade per trade, you actually are defaulting to the minimum trade amount. So I could change this to 25, and you can see that the $25 amount would be the minimum all the way down until you hit 0 because you've broke the account. Okay. Let's see, max trade, I'll go into that here in just a second. Let's play this a little bit further. The minimum, so I'm going to set it at 20. I'm going to set the per trade percentage at 5%. Okay, the max trade, I'm just going to set it at 100 right now. We'll talk about that more in a second here. Okay, so we start out at $25, which is 5% of 500. We have two losses out of the box. Now, we are off a little bit, and let's look at this. Based on a 50% winning ratio, win-loss ratio, you should have approximately 7,050 and 50 wins within this 14,100 trades. Okay. The calculated wins in this particular instance are less than 7,000. So that could be pretty significant. That's about a 80 trade difference, somewhere in that area. So we want to adjust that. And the way we adjust that, now keep in mind that this calculated wins is all random. The way these losses, see, the red is loss. Then you have 2 wins. You have a loss. The way the wins and losses play out, it's all random. There is nothing I can do to change that. The calculations just do that randomly. And so what you want to do is you want to hold down the Shift key, press the F9, and you notice that the calculated wins changes. So in this particular random calculation, out of the 14,000 possible trades, 7,100 were shown to be wins. So we're a little high on the wins. I'm going to hold the Shift key down and hit F9 again. Now this is a little closer, 7,032, 7,050. That's pretty close. That's a little closer to our scenario. But look over here. You have month 1, month 2, month 3, month 4, month 5, month 6 balance. You're out of the money before you hit the end of month 1. And let's look at that. There's week 1, week 2, you're down to $184. Week 3, you're down to 136, and here we go. Looks like day 17 is where you drop down to 60 cents. So your account's gone from $500 to 60 cents in a matter of 17 days. All because you're trading your win-loss ratio, you're winning 50% of the time. And let's see, do we have any spikes that go above 500? No, you're pretty much out of the box. We start off with 2 losses. We have 2 wins. We don't regain any. We're still, even those 2 wins, let's see what's the biggest run. Here's our biggest win. Looks like a pretty big win streak. There might be a couple others like that. Yeah. But take in mind we lost 20, 20, 20, 20. And for each win, we're only getting back 14, 14, 14, 14. So we're still down. So we started out at 309. And actually our win streak was long enough to actually grow our account back up to $400. But immediately after that, we have 2 losses. So at 50%, you're just not gonna do it. It's just not gonna happen. Okay. So let's look at 55%. Little different scenario. We have by the end of month 1, we have $472. Month 2, $370. After that, it drops down to $7. So you've gone below the minimum, so you can no longer trade. And that's at 55%. So let's take a few more looks. Now we're at 77.87 here on calculated wins, 77.55 on what they should be. So let's do a Shift F9. That's fewer wins. That's just about right on the money right there. 7756, 7755, and look at our monthly balances. We're still losing. In this case, by month 1, we're out of the money. We don't have any money to trade. Let's see what day. Looks like day 12. By day 12, our account is broke. So let's see, approximately 115 trades into the program. The bank is broke. So I'm going to do some Shift F9 scenarios, and let's see if we can get anything that looks substantial. If you just watch over here, these columns, as I Shift F9, you'll see that one's $348. It's just not happening. Even at 55%, it's still not happening. See, this is the largest month 3 balance I've seen, but we're still off our initial balance by almost $200. Okay, I'll do a few more here. Here's our best so far. Month 2, we're actually in the profit by $70. But look at the end of month 3, we're back down to less than $400, and by month 4, it's gone. So the odds of you having, that I just passed that one. That was a little bit bigger the first 2 months, but you still ultimately lost it. And all I'm doing is holding down my Shift key and hitting F9. I'm looking through the calculations. This one looks a little better, right? See, now if you didn't have this calculator, here's the illusion. If you're winning at 55%, your first month, you come out, you're up $160. Well, yeah, things are looking pretty good, right? By the end of month 2, you have almost $800. Things are looking really good. So let's look at that. 795 minus 500 equals 295 divided by 500. That's a 60% or 59% rate of return on your money. So if you stop right there, you're ahead of most people. But that's not why you're in this game, right? You're in this game to continue to build your investment. But without knowing what this illustration is going to show you, there's the end of month 1. We have some pretty good win streaks here. Look at this win streak. Wow. This takes you from $800 to almost $1,200, right? Let's get down to, okay, so this is the end of month 2. So yeah, look at this, 400. You're at $400 here. By the end of that, you're almost at 700, so you've almost doubled. So you can see there's some pretty nice win streaks there, and that's part of what's driving the outcome in those first 2 months. But now we start hitting some losing. Look at this. So we start at 762 at day 47. By the end of day 51, we've gone from 724 down to 446. Actually, the lowest was 417. That's a significant drop. And then look at here. Then we have boom, 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 boom. This series of string of losses. So from 472 down to 326. Got some losses. You got some wins. You have almost as many wins here, but that only takes you from 326 back up to 396. And you started at 472. So at that particular point, so you're still down almost $80. So you're just not, there's just not enough wins in this scenario to get you there. And here's the really interesting thing. The number of wins you should approximately have at 55% are 7,755. In this calculated scenario, the reason these numbers are so good is because it's showing above 55%, because you have over 7,800 wins calculated in the 14,000 transactions below. So this is actually painting a pretty picture, at least in the beginning, and then of course it breaks down and you lose. At 60%, now you start to see some consistency. Your balances are not so dramatic. 8,460 possible wins at 60%. So we should have, you have 8,510. So the wins are a little bit high. I'm going to do a Shift F9. Let's see if we can get it closer. That's pretty close. That's 8,447 versus 8,460. So there's fewer wins calculated. And you still have a wonderful outcome here. Your first month, you've doubled your money. Second month, you've tripled it. But then third month, look at that. You drop down. You're still ahead. So let's look at that third month. That's month 1, month 2. So there must be like just a string of losses here that are just, yeah. There's just too many losses happening in this month. So the account just drops. And don't kid yourself. The law of big numbers, if you know anything about them, you're going to have drawdowns like this. You're going to have moments when this happens. It's going to happen. Now notice we're trading $100 here because our account size, our balance size is at this point is $2,500. So to trade $100, you can do that safely at 60%. So let's go ahead and go all the way down. But look at this. If we play this scenario all the way out, you still at 60%, you're still ending up with $690. So by month 6, it looks really promising, right? But if you play it out, Let's see, how many months is that? Let's go back. By month 70, 6 years, you're down. Let's see, where does it actually break? Let's do this one. I'm searching. Oh, come on, it's there. Let me scroll down. There's 14,000. It's not so easy to find. That's month 10. Aha, right here. Month 18. There we go. Let's see. There's month 14. See, look, the money's dropped. Okay, so this looks so what, week 59. So that's just a little over a year, and so that's 60 weeks. That's you're gone, you're broke, and that's at 60%. So that's the point of this whole process, going through this calculator, is so you can understand really what you're up against. That, sure, is it possible that you won't end up with $16.90 by the end of the 15th month? Sure, it's possible. But what you got to know is there's a probability based on numbers at 60% that you are going to have that kind of a challenge. So where one person their account might just boom, another person doing with the same percentage rate might actually have a completely different outcome. So shift F9. See, look at here. Here's this shift F9. Let's see. Yeah, and these are really close. 84.66, 84.60. And look, your first month, you're down $20. You're up $60. You're down. You're up. You're up. You're down. So I'm telling you, 60% is probably more of a break-even scenario than anything. And if it really plays out, you could lose your account just like you would at 55 or 50%. It just would take longer. Okay, so let's take that to 65%. Now it changes. Now the numbers start looking different. They start growing. So at 65%, there should be approximately 9,165 wins. We're a little bit light on wins, which is good because we're actually being more conservative in our projection. But if I want to match that up, I'm going to hold down my shift key, press F9. This one's pretty close. 91.57, 91.65. It's not too far off. And look what's happening here. Your account is growing at 65% wins. So out of every 10, let's just say out of every 20, you're winning 13. Yeah, you're winning 13 wins. You're losing 7. And this is the outcome. And this is a random outcome. So let's look down at the bottom. Sure enough, let's bounce back up here. Let's see, month 70, you're over $143,000. That's 6 years from now. And you started with $500. But look what it took. It took you having trading at a 65% win-loss ratio. That's reality right there. And that's really ultimately why I created this calculator, and I apologize that for that one calculation, I think it drew a completely inaccurate picture. But this is it. This is reality right here. This is what it's going to take. So in your demo trade, if you can't win 13 out of every 20 trades, you're not ready. It doesn't matter how good the indicator is. If you can't do that, you're not going to have success. You might have intermediate success, but you're going to have intermediate losses as well. And those losses are going to draw down on your account to a point that you're no longer going to have money to trade. So I think this is great, and I really, Jody, I can't thank you enough for catching that, because this is really what I wanted to illustrate. This is such a powerful calculator, and it will keep you based in a trader's mindset, an investor's mindset, rather than a gambler's mindset, because the risk is real, but the potential is real if you're willing to do the work. So let's pop back here. I know I've gone longer than most of you probably would like. I have this one last thought here. Adding more money to your investment account. If you're doing that or thinking about it or considering it, it's time to demo. It's you're gambling at that point, because if your percentages have got to be so far off what I was just illustrating, that adding money to it's not going to change what you're doing. It's what you're doing that needs to be looked at, that needs to be evaluated. And that's where a trade journal can be helpful, taking snapshots of your trades. So you see a trade, you're interested in a trade, go ahead and execute the trade, and as soon as you execute it, get the execution out of the way, take your snapshot, take a picture of it, a screen capture, okay, and keep that. So, and when the trade is done, if it's a win or a loss, label that screenshot a win or a loss. And as Reginald says and Sean says, 200 trades. If you can't hit 65% with 200 trades, then there's really no reason for you to be putting real money into the game. And I think it was Greg that said, you play how you practice. How you practice is how you play. So the beauty of the $20 minimum, this is how if this is where you need to stay in this range. You need if you're serious about your demo account, and I know it's fun to trade big amounts of money, but here's what you need to be focusing on: the amount you're actually going to be trading on your real account. That way you don't have any illusions or delusions of how fast your money is going to grow. Sure, if you take a chance on a $10,000 trade and it wins, suddenly you have $10,000 more in your account. But look here. Do you see these red things? Those are losses. That 10,000 could just as easily have been a loss, and instead of losing $20, you lost $10,000. So while it's fun, I don't know that it really serves you in the real world. Playing around doing those kind of things. So stay focused, because really this is about habits, your trading habits, and building up a winning habit. And 65% should be your target. Anything above that, and you should be golden. I mean, absolutely golden. So until you're there, put off your dreams of buying your new yacht with your $500 investment. Seriously. Or paying off your house with your $500 investment. Until you can trade 65% wins, 13 out of every 20, you're not going to be paying off your house anytime soon. And even then, remember what I said, this was out, it wasn't until year 6 that you got to $145,000. And I don't know what you owe on your house, but it's going to take a large chunk of that for me to pay off my house. So this is not a 90-day make $100,000 kind of deal. It's one more aspect. It's one more way to make money in the DS domination world. And it could be an extremely profitable way, but you have to become an extremely profitable and disciplined trader. So this is James Possible. I hope this information was helpful for you. I hope my ranting wasn't too much for you. Um, I call it ranting. It's real and genuine concern because I don't want to see you lose your hard-earned money. Um, and I mean it's so seductive, and this is what this is why brokers make so much money, because it is so seductive, and there is no absolute knowing because you don't know the market. I don't care how well you trade your indicator, you do not know the market. It's always going to be a guess. No matter how educated the guess, it's a guess. Your timing is a guess. It can be based on experience and all those kind of things, but you're still ultimately making a guess because you're going to lose some of those trades because your timing was off. So, and I'm talking just as much to myself as I am to you. So here's to your success in trading. I'm going to post a new calculator up in the UOP Options Mastermind group, and hopefully you take the time to use it to understand what I'm sharing with you, because it's just so important that you understand this aspect of trading. So thank you. Have a great day. You can contact me on Facebook, just at James Possible, or you can contact me via YouTube. I'll message you back and just go from there. Take care.